This lesson, we are going to be looking at it from the sales transactions and recording the sales transactions for like the returns and allowances. We're also going to look at a correcting entry. So last lesson was looking at purchasing side. This time we're looking at sales side. And so let's go on to sales return. Is the same idea as a purchase return. It's when the product comes back into the, and we're going to reduce the accounts receivable. A sales allowance is when the product is not returned, but we reduce the amount of the accounts receivable. So like if the product was defective or an inaccurate number of units were sold, and the form prepared by the vendor showing the amount deducted of returns and allowances is a credit memorandum, just like we had the debit memorandum. And so one thing that you'll notice is different here is there's actually a sales tax that we need to worry about, because we have a sales tax payable that creates every time that we use, we charge sales tax. And so we'll have to also account for the sales tax payable being reduced whenever we return, when there's a sales return or allowance. So let's go ahead and journalize this. So Lake Automotive, we're going to grant a credit to Lake Automotive for a merchandise return of $65.85 plus a sales tax of $3.95 from the previous sales 500, which is a total of $69.80. This is with the credit memorandum 14, excuse me. So like I said, the sales return and allowance is going to get a credit, but so is the sales tax payable. We are reducing both the accounts. We're reducing how much we owe for this, we're reducing both the sales tax payable and we're reducing the accounts receivable. Both because of the fact that we have reduced this, and the sales tax payable is going to reduce as a debit and the accounts receivables are going to reduce as a credit. So you're going to have two entries for your debit account. So you have your sales return and allowance and the sales tax payable. Those two will add up to give you the total of the $69.80. And recording information just like we've been doing. And so for to post this, and this is where I messed up in the last video, I forgot to record our account numbers, but we'll go ahead and post the date, the page number for General Journal, the credit, and the account balance is going to adjust, and then the post reference is going to be reflected over on the General Journal. And then we're going to do the same. We have found a sales on account to Center College was incorrectly charged incorrectly charged the account of Wells Apartment. So basically we posted it to the wrong account. So we're going to correct Skinner College by correctly debiting their account the $334, and we're going to remove it from Wells Apartments by giving them a credit of $34, and that's basically just washing out that last transaction that we incorrectly posted. And if you want to see the steps, that's the steps that you need to do. So the same difference that we had between sales return and sales allowance. Sales return, the merchandise comes back. Sales allowance, it doesn't, often due to damaged or we did not send enough merchandise whenever it was shipped. We're journalizing for sales returns and allowance. It's going to be your credit memorandum. And sales returns and allowances are not debited to sales account. It's to provide better information, enabling management to quickly learn a percent of sales returns and allowances greater than expected. And so we want to monitor how many sales returns and allowances we have to better make sure that we are best servicing our inventory. So let's go ahead and do a practice set. And so we are going to look at these 4 transactions. And I'm going to do the first 2 with you live, and the other 2 I'm going to pause it and then let y'all finish them up and then check your answers with what I have. And so For the June 4th, we had credit granted to Keller Associates for merchandise returns. This is a return. And it does have sales tax, so that's something we do want to note. And our sales tax, excuse me, as a computer glitch there. And our sales tax was $14.70, and the total amount was $259.70. So Keller is going to get a credit of the total, but we're going to have the merchandise return go to sales returns and allowance and sales tax payable. So let's go ahead and note those. So this was in June 4th. And the accounts that we are going to be working with, the sales returns and allowances. And this is from our credit memo 28. And $245 is actually the material that was returned, so that's what goes there. But we also had our sales tax payable of $14.70. And that gives us the total amount that goes to your accounts receivable / Keller Associates of the grand total of $259.70. But then on the 9th, we learned that a sales account on account to Ashton and Lindsay were incorrectly charged the amount to the account of Abram Corporation. And so we need to correct and reduce Abram's and post it to Ashton's. And so if we're going to post it to Ashton's, they're going to get the debit. And so on the 9th, Ashton's and Lindsay LLP is going to, from our memo 61, get $623 posted to their account. We need to take and remove it from Abraham Corporation of that same 625 or 623, excuse me. And so we are going to, I'm going to pause it here. I want y'all to do 12 and 26. The thing that's different on 12 is there was no sales tax. And so you're actually just going to have two lines. You're not going to have that sales tax payable in this one because there was no sales tax. So you should see the sales returns and allowances and accounts receivable, and Lambert Schools are going to have those debits and credits, and Keller Associates is going to get the debit, and Carson Properties, because that's who was incorrectly charged, is going to get the credit. Let's go ahead and go on to posting these transactions. And so our accounts receivable ledger, Abram, let's see, is going to receive a credit of $623, which is going to reduce their balance to where they now have $1,026.50. And then Ashton and Lindsay, that was who was incorrectly not put in there for that same date. And I don't think I actually put the date. That was on the 9th. And this came from our G12 page. And our post reference was 1110. And then Ashton Lindsay on the 9th. This came from our G12. And they received a debit balance of that $623. And that's going to increase their debit balance to where it's $1,307.25. Carson Properties, again, was incorrectly charged, so we need to reduce their amount, and that happened on the 26th. And the post reference is going to be that, again, that general 12. Oh, and I forgot to put Ashton's 120. And they had a debit amount of $598. And that brings their balance, oops, I put it in the debit spot. Brings their balance down to $1,049.60. Keller Associates is going to have two different transactions. The first one happening on the 4th, and we had a credit amount of $259.70, and that is going to reduce their total amount to $1,456.70. And then on the 26th, we need to correct the fact that they did not get charged that $598. And that is going to increase their amount to $2,054.70. And this was both from the General Journal, page 12. And then up here, this is where we have the slash. And that would be the 140. This would be slash 140. And then Carson Properties had the 130 as their account number. Last one for those is Lambert Schools. And Lambert Schools was the transaction from the 12th. And this was our general page 12. And on Lambert Schools, we had a credit amount of $206. And that brings our balance down to $3,284. Now, our accounts receivable. We have two transactions that are going to affect those. We have both on the 4th. We had an amount of, from our page 12, we had a credit amount of $259.70. And remember, that number was not the same as what we did for Keller, because it has sales tax for them. And that brings that balance down to $8,928.05. And then on the 12th, again on page 12 of our general journal, we have another credit of $206, which brings our debit balance down to $8,722.05. And our sales tax payable. So only one of those two transactions had sales tax. That was only on the, I think it's in Keller. Yeah, Keller has it. And so that brings that was on the 4th. And again, page 12. And we're going to reduce our amounts payable is by $14.70. And that brings us to $633.40. Now our sales returns and allowances, we had it both on the 4th and on the 12th. And this was from our page 12. Our debit amount was $245, which brought our debit balance to $2,732.60. And then on the 12th, again on that page 12, that brought us to 206. Excuse me, that's a 206 debit amount, and so that brought our total to $2,938.60. Okay, and so let's go up here and figure out all the ones I didn't post. So sales returns and allowances was your account number 4130. 4130. 4130. Our sales tax payable was account number 2120. And then our accounts receivable was 1130. Oops. I marked a slash on that one. It was not supposed to be on that one. It's supposed to be on this one that has a slash. Lambert Schools was 150. You might post everything correctly.